Preparing for a finance transformation consultant at Accenture interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does finance transformation mean to you, and why do companies invest in it? Finance transformation is the redesign of people, process, data, and technology so finance becomes faster, more insightful, and better controlled. I would frame it around business outcomes: lower close cycle time, cleaner forecasts, reduced manual effort, stronger controls, and improved decision support. At Accenture, I would also connect it to platforms like SAP or Oracle, automation, shared services, and change adoption, because the value only lands when the new model is actually used. While answering, focus on finance transformation as a business-led redesign of processes, systems, data, controls, and operating model. Link it to CFO priorities: speed, insight, efficiency, compliance, and scalability. Question 2. How would you assess the current state of a client's finance function? I would start by understanding the client's finance objectives. Then assess processes across record to report, procure-to-pay, order-to-cash, planning, and reporting. I would interview finance and business stakeholders, review KPIs, map pain points, and analyze system and manual touchpoints. Then I would benchmark performance, identify root causes, and separate quick wins from structural changes. The output should be a clear current state assessment, target state vision, and prioritized roadmap with benefits, risks, and dependencies. Make sure to cover process walkthroughs, stakeholder interviews, data analysis, benchmarking, pain point mapping, control review, systems landscape, and maturity assessment. Explain how findings become a prioritized transformation roadmap. Question 3. A client takes 12 business days to close the books. How would you improve the month-end close? I would first break the close into tasks by owner, timing, system, and dependency. A 12-day close usually reflects upstream data issues, late accruals, manual reconciliations, unclear ownership, or excessive review loops. I would introduce a standardized close calendar, automate recurring journals and reconciliations, define materiality thresholds, and move activities pre-close where possible. I would also track close KPIs daily. The goal is not just speed. It is a faster close with accuracy and control discipline. In your answer, talk about close task analysis, bottlenecks, upstream data quality, reconciliations, journal controls, standard close calendar, automation, materiality thresholds, ownership, and performance tracking. Question 4. What role would you play as a finance consultant on an SAP or Oracle ERP transformation? My role would be to connect finance requirements with the ERP design. I would help define future state processes, run fit gap workshops, document business requirements, validate chart of accounts design, support controls, and ensure reporting needs are captured. During build and test, I would help prepare test scripts, manage defects, support data migration validation, and train users. I would not just focus on system go-live. I would focus on whether finance can operate effectively after go-live. Be sure to mention requirements gathering, process design, fit gap analysis, finance configuration input, testing, data migration support, controls, training, and acting as translator between finance users and technology teams. Question 5. How would you handle resistance from finance users during a transformation program? Resistance is normal because transformation changes routines, controls, and sometimes roles. I would first understand the source: fear of job loss, lack of clarity, poor training, or disagreement with the design. Then I would tailor communication, involve key users early, create super user networks, and show practical benefits like fewer manual reconciliations or cleaner reporting. I would also escalate sponsorship gaps. Change management is not a side activity. It is what converts a design into adoption. While answering, focus on stakeholder mapping, empathy, clear case for change, super users, communication cadence, training, feedback loops, leadership sponsorship, and showing how changes reduce pain rather than add burden. Question 6. How would you build a business case for finance transformation? I would start with a baseline: headcount, cycle times, system costs, error rates, rework, audit issues, and process volumes. Then I would size benefits such as productivity savings, faster close, reduced technology complexity, better working capital, and improved compliance. Costs would include implementation, licenses, integration, data migration, training, and change management. I would separate hard savings from qualitative benefits and phase them by timeline. A credible business case needs transparent assumptions, not just attractive ROI number. Make sure to cover baseline costs, benefit categories, investment requirements, implementation timeline, one-time versus recurring savings, qualitative benefits, risks, assumptions, and how to link financial value to operational metrics. Question 7. Which KPIs would you use to measure finance transformation success? I would use a balanced KPI set because finance transformation can fail if it only chases cost reduction. Efficiency metrics include cost of finance as a percentage of revenue, invoices processed per FTE, and automation rate. Effectiveness metrics include close cycle time, forecast accuracy, reporting turnaround, and first-time right percentage. Control metrics include reconciliation breaks, policy exceptions, and audit findings. I would also measure user adoption because a technically successful system can still fail operationally. In your answer, include efficiency, effectiveness, control, and insight metrics. Mention close cycle time, forecast accuracy, cost of finance, touchless processing, invoice cycle time, reconciliation breaks, and adoption. Question 8. How would you improve the order-to-cash process for a client with high overdue receivables? I would diagnose the overdue receivables by segmenting the aging report by customer, product, geography, dispute reason, and collector. The issue could be weak credit controls, late invoicing, billing errors, poor dispute resolution, or slow cash application. I would tighten credit governance, automate invoice delivery, improve dispute workflows, and prioritize collections based on risk and value. I would also align sales incentives with cash discipline. The key metric is DSO, but the root causes sit across the business. Be sure to discuss credit policy, billing accuracy, dispute management, collections segmentation, cash application, customer master data, automation, DSO, aging analysis, and coordination between sales, finance, and operations. Question 9. How would you transform a procure-to-pay process that is highly manual and control-heavy? I would first map the P2P process from requisition to payment and identify where manual work and control friction occur. Common levers include standardizing supplier onboarding, increasing PO-backed spend, automating invoice capture, using three-way match, and routing exceptions based on risk. I would also review approval thresholds and segregation of duties. The goal is not to remove controls, it is to embed smarter controls into the workflow, so compliant transactions move quickly and exceptions get attention. While answering, focus on purchase order discipline, three-way matching, supplier onboarding, invoice automation, approval workflows, spend controls, exception handling, segregation of duties, and balancing efficiency with compliance. Question 10. Why is master data important in finance transformation? Master data is the foundation of finance processes and reporting. If the chart of accounts, cost centers, vendors, customers, or product hierarchies are inconsistent, automation breaks and reporting becomes unreliable. I would treat data governance as a core workstream with clear owners, standards, approval workflows, and cleanup rules before migration. For example, duplicate vendors can create payment risk and reconciliation effort. Clean master data improves controls, analytics, and the quality of every process built on top of it. Make sure to cover chart of accounts, customer and vendor data, cost centers, hierarchies, data ownership, governance, reporting quality, process automation, migration risks, and downstream impact on analytics. Question 11. How would you design a target operating model for the finance function? I would design the operating model around what finance needs to deliver: transaction processing, control, planning, insight, and business partnership. Routine, rules-based work may sit in shared services. Specialist areas like tax, treasury, or analytics may sit in centers of excellence. Strategic support stays closer to the business. I would define roles, process ownership, service levels, governance, and location strategy. A good target operating model clarifies who does what, where work sits, and how performance is managed. In your answer, discuss retained finance, shared services, centers of excellence, business partnering, governance, location strategy, roles and responsibilities, process ownership, service levels, and technology enablement. Question 12. How do Agile delivery methods apply to finance transformation projects? Agile helps finance transformation by delivering value iteratively instead of waiting for one big release. For example, a reporting dashboard can be built through sprints, with finance users reviewing prototypes and refining requirements. I would use a prioritized backlog, clear product owner, sprint ceremonies, and demos to keep stakeholders engaged. That said, finance also has hard close dates, controls, and audit requirements, so Agile needs discipline. The best approach combines iteration with strong governance. Be sure to mention sprints, backlog prioritization, product owners, iterative design, demos, user feedback, minimum viable process or solution, and when Agile must be balanced with finance controls and deadlines. Question 13. Where would you apply automation, analytics, or AI in a finance transformation program? I would apply automation where processes are high volume, rules-based, and data-driven. Examples include invoice capture, three-way match exceptions, account reconciliations, recurring journals, cash application, and management reporting. Analytics and AI can support anomaly detection, forecast drivers, collections prioritization, and variance explanations. I would be careful not to automate a broken process blindly. First, standardize and clean the process, then automate. Otherwise, technology simply speeds up bad data and inconsistent decisions. While answering, cover use cases such as reconciliations, invoice processing, anomaly detection, forecasting, management reporting, collections prioritization, journal entry controls, and the need for data quality and governance. Question 14. How do you maintain internal controls during a finance transformation? Controls need to be designed into the future state, not checked at the end. I would map existing controls to redesigned processes, identify control gaps, and validate segregation of duties, approvals, audit trails, and system access. For SOX-relevant processes, I would involve internal audit and control owners early. During testing, I would include control scenarios, not just happy path transactions. Transformation should reduce manual control effort while improving reliability, evidence quality, and accountability. Make sure to cover control mapping, segregation of duties, system access, approval workflows, audit trail, SOX considerations, testing, remediation, and coordination with risk, compliance, and internal audit teams. Question 15. A CFO says finance spends too much time producing reports and not enough time generating insights. What would you recommend? I would first inventory existing reports and ask which decisions each report supports. Many finance teams produce duplicated, manually adjusted reports with inconsistent definitions. I would rationalize the reporting catalog, standardize metrics, automate data feeds, and create dashboards for recurring management reporting. Then, finance business partners can spend more time explaining drivers, risks, and options. The objective is to move from report production to decision support, where finance challenges the business and shapes actions. In your answer, discuss report rationalization, self-service analytics, standard definitions, data model, automation, dashboard design, business partnering, commentary quality, and shifting finance capacity from production to analysis. Question 16. Why do you want to work in finance transformation at Accenture? I am interested in Accenture because finance transformation here sits at the intersection of strategy, process, technology, and delivery. Accenture has the scale to advise CFOs, implement platforms like SAP and Oracle, and drive adoption across global organizations. That combination appeals to me because I enjoy solving finance problems that are both analytical and operational. I also like that the work is outcome-focused: better close, better planning, stronger controls, and finance teams that support business decisions. Be sure to connect Accenture's consulting scale, technology partnerships, industry depth, transformation delivery capability, innovation focus, and client impact. Make the answer personal, specific, and credible, rather than generic. Question 17. How would you translate finance requirements for a technology implementation team? I would translate finance requirements into clear process flows, user stories, data requirements, control points, and acceptance criteria. For example, instead of saying finance needs better accruals, I would define the source data, approval logic, posting rules, reporting output, and exception handling. I would also confirm terminology, because finance and technology teams often use the same words differently. My role is to make requirements testable, reduce ambiguity, and ensure the final solution solves the business problem. While answering, focus on bridging business and technical teams, documenting requirements, process flows, user stories, acceptance criteria, data fields, controls, reporting needs, and validating that the solution meets finance outcomes. Question 18. How would you manage scope creep in a finance transformation project? I would manage scope creep through a clear baseline and disciplined change control. When a new request comes in, I would assess impact on cost, timeline, risk, controls, integrations, and benefits. Then I would take it through governance, rather than accepting it informally. Some changes are necessary, especially regulatory or control-related items, but others are enhancements that can move to a later phase. The key is transparency. Stakeholders should understand the trade-off between scope, speed, quality, and value. Make sure to cover scope baseline, impact assessment, governance, change control, prioritization, trade-offs, stakeholder communication, benefits alignment, and how to distinguish critical requirements from nice-to-have enhancements. Question 19. What are the key considerations for testing and cutover in a finance system transformation? Testing and cutover are where design becomes operational reality. I would ensure unit testing, system integration testing, and user acceptance testing cover end-to-end finance scenarios such as invoice to cash, procure-to-pay, and close-to-report. Data migration must be reconciled, security roles validated, and defects triaged by severity. For cutover, I would plan rehearsals, ownership, timing, blackout periods, and fallback options. A smooth go-live depends as much on readiness and communication as on technical completion. In your answer, discuss unit testing, system integration testing, user acceptance testing, data migration validation, reconciliations, security, defect management, cutover rehearsal, blackout periods, fallback planning, and business readiness. Question 20. What trends are shaping the future of the finance function? Finance is moving from backward-looking reporting to real-time performance management and strategic decision support. Digital core platforms, automation, AI, and predictive analytics are reducing manual processing and improving insight. I also see stronger focus on data governance, ESG reporting, continuous close, and scenario planning. The CFO role is expanding beyond stewardship into value creation. For a finance transformation consultant, that means designing finance functions that are efficient, controlled, data-driven, and close to business decisions. Be sure to mention digital core platforms, real-time reporting, predictive analytics, AI, automation, finance business partnering, ESG reporting, stronger data governance, continuous close, and the CFO's expanding strategic role. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.